10/10/2025, the global financial markets had experienced a dip due to the tweet that was made about the tariff war coming up again. Don't forget, we experienced this tariff war in April 2025 and it wasn't funny. A lot of financial markets reacted badly to the news and to the occurrence. Such may be coming up again. But what does that mean to you? And what are the lessons to learn? What are the key takeaways? And how should you approach investing in the financial market? Those are the things we'll actually be discussing on this video. Welcome back to my channel. My name is Damilola, fondly known as Illumine. I'm a financial market enthusiast, a personal finance and investment coach, and educator. And on this channel, I talk about everything personal finance and investing in the global financial markets like the stock market and the crypto market. If you're coming across this channel for the first time, do give it a like, and also don't forget to hit the subscribe button right away. This will encourage me to bring educative videos and content that would add value to you, and also to push it to many other people who this kind of video will be beneficial to. Also, lastly, it will encourage me to bring more videos like this to you so that you can learn a lot about your personal finance and investing in the stock market. Now, let's go to the nitty-gritty of the discussion of today. Now, the global financial market, which comprises of the forex market, the crypto market, and the stock market, experienced a dip. We experienced up to 9% dip from Bitcoin, which dropped from around 125,000 to somewhere around 105,000. That is massive. And also the stock market, like the ETFs, experienced a dip of up to 5%. But what are the lessons you should learn from such occurrence? Number one, you are never too late. The first thing you want to understand is the fact that the right time to start investing is when you're ready. And I know you must have heard a lot about the best time to start investing was yesterday, the next best time is now. That is true as well. However, that must not push you to start investing when you're not ready. Now, what do I mean by being ready? I mean gathering enough knowledge about what you are about to start venturing into. For example, just understanding that Bitcoin actually moves in 4 years. So there's a 4-year cycle of Bitcoin, which is called Bitcoin halving. And 2025 is meant to be the bullish year, which it has already done. So we don't know what could happen again in Bitcoin. It could be the start of the bear market. And if you know that, all you would have to do is you would take caution while investing in Bitcoin, or you would wait for the next bear market. So you are never too late to get into any particular stock. Just wait for the right moment for you to start investing into the instrument. Secondly, the market does not continue to go up. That one is already a reality that everybody must settle in their mind. The market will never continue to go up. Yes, on the long term, the market goes up, but intermediately, we experience such dips like this in the market. All right, and let me explain this as well, that anytime we experience dip like this is another buying opportunity. It means that this particular instrument, whether Bitcoin, Ethereum, ETFs, or individual stocks, are selling at discount. Does that make sense? So that is the second thing you want to understand. The market will never continue to go up. Number three, FOMO is your worst enemy. What is FOMO? FOMO is fear of missing out. And what that means is you trying to chase the market. Like, okay, when you hear that Bitcoin is already pumping, instead of you to relax and wait for the next cycle, we have cycles in Bitcoin, which is one video I would also be doing buy and buy, right? You want to wait patiently till the next cycle. The market isn't running away. You cannot miss out totally of Bitcoin because you can always buy it later. Does that make sense? So instead of chasing the market when the market is already pumping, you want to wait until a reversal like this to take advantage of that reversal and invest. Number four thing you want to know is investing is for the long term. Statistics says that 90 to 95% of them lose their money. But once you shift from being a trader to being an investor, your reality changes from whether you will lose your money to how much you're going to make in the market. I don't know if you understand what that means. So you are no longer discussing if you will lose your money or not. You now start discussing how much return you can make from what you are investing. That is what differentiates a trader from an investor. The next thing I want you to know is start buying based on conviction. Okay, don't buy because someone is telling you to. All right, there was a news sometimes ago about one of the most influential person in, I don't want to mention names now, in the crypto space, who told you to buy. He says continue to buy Bitcoin because it's still going up. Now imagine that you started buying. By now you will be in loss because the market had drastically dropped. So what is the lesson from that? Don't follow what the social media tells you to do. Rather, follow what your conviction tells you to do. Buy because you have that conviction that this asset or this instrument you are buying is good for you long term. Next is have cash reserve. There's something we call emergency fund and opportunity fund. Now we'll talk about different kind of fund that a person should have eventually on one of these videos that will be uploading anytime soon. But you need to understand that there's strategic time that a window of opportunity is open for you to buy. Such opportunity is what we are experiencing now. When you have cash reserve for this kind of time, you take advantage of it by pumping in your money when the market drops like this. Okay, so always have cash reserve in form of maybe an emergency fund or an opportunity fund. Now, the concept of emergency fund does not necessarily have to be negative. Does that make sense? So you're not just having an emergency fund because you may lose your job anytime soon or because an unforeseen expense can come up anytime. No, sometimes it could be a positive opportunity, something like this. Does that make sense? So you want to use your emergency fund to take advantage of this kind of drop. And the last thing is never sell at loss. Now, as much as sometimes our emotion may want to take over us and make us to close our positions at loss, it is said that the market on the long run continues to trend upwards. What that means is if you stay enough in the market, you will most likely not lose your money. At least this is backed up by data from different areas. In fact, most of investors that have underperformed the S&P 500 or the market generally are those that are one way or the other investing like a trader. They are coming in and coming out, coming in and coming out. That kind of thing may cause you to either not perform as well as you're meant to in the market, or you would eventually lose your money. So you don't want to close your position at loss. You want to be patient enough to allow the market to do its thing, because on the long run the market actually trend upward. If you've watched this video to this point, I want you to do me a favor by hitting the subscribe button if you haven't yet, and like this video as well. If you want to as well, you can share your own experience or your own idea in the comment section, and I'll definitely be replying to you. I'll catch you on my next video as usual. Cheers.